Ladies and gentlemen, this is Greener Pastures and we are hitting the markets raw. Welcome to our channel everyone. If you are new here, please like and subscribe the video, turn on the notification button. You can even leave a comment if you like any recommendation. You can criticize, you can praise or whatever you'd like to say. Today's topic is supply, support and resistance. Support and resistance are key levels on the market with high probability of price reversals. As you can already see here on my screen, I already have a drawing here of how support and resistance will look like. I'm going to show you here, try to explain here with this drawing, and then we're going to go to the chart to explain it further in detail. So support and resistance, as we already said, that these are key levels on the market with a high probability of price reversals. Like when price gets there are high chances that price can break those levels. Can stop from trending to the upside or trending to the downside and reverse. So you'll always find resistance at above current price level, while support you'll find it at a below current price level. So here this is what happened. Price was trending to the upside, it came here, it found resistance, it fell to the downside. Now it was on support, and then it failed to break below this level, and then started going to the upside. It came up, it came down, it came down, and then came up. So support and resistance, they can be broken, and then when they are broken, like when support is broken, whenever price comes back to test that level, now it changes, it becomes resistance. So for example, here we saw price coming back down here to test this resistance support, and then it failed to break through and go below this level. So it penetrated, price couldn't hold on, couldn't stop price. This support, it was no longer strong to hold price from to stop price from breaking through, and then price broke through here and then came back for a reversal. It reversed. When it came to test this level again, it was no longer support, because now price is now below the current market price. Because now this is above the current market price, it now becomes resistance. Remember, the difference between resistance and support is that resistance is always above the current market price. Our price was here, let's assume that this was where the price is. Now this is where our previous support is, but now that price is below that level, this makes it resistant. So in a situation where if price breaks through resistance, for like the example here, price went to the upside and then it came back again. When it came back here, this was our old resistance. Now it has become support, because what's happening now, this price is above this level here. So support is always below current market price, while resistance is always above current market price. So there's two types of support and resistance. There's this one of trend continuation, like when price start making those higher highs and higher lows, but that's part of market structure. We'll explain this into detail in the next video, where we'll be talking about market structure. So, and then there's this one as well of counter trend. So let's go to our chart there to see what support and resistance looks like on the chart. It's gonna be let's zoom it in and broad, and then we can find those levels where we can refer them as support and resistance. So here is just an example of what support and resistance will look like, but remember, it won't always look like this, because this is USD JPY. It's different, but it trends are different. That's what I meant to say. And then what will happen is, but all the time, you will find that resistance is always at the top, support is always at the bottom. So this is our resistance here. Price came here, it fell, we couldn't go up from here. We started going to the downside, and then when we came again here, we couldn't break this high here. Now we started going to the downside, and then price came back again, failed to break this high, even though we see a spike here, which is a sign of liquidity. It went up there to collect orders, and then we saw the move to the downside. And then when it came to the downside again, at some point we finally broke out of structure here. We broke this resistance and went above this level. But now when we came back here to test this level, now when price was here, price was above the current market price, which makes this level now is no longer resistant, now it's support because it's below the current market price. And then from there it started shooting to the upside. Similar with our support here, like where there's support, where there's resistance, there's always support. This is our resistance here. When price couldn't break these lows here, this makes this level our support. So in other books they will tell you that the difference between resistance and support, once they are tested so many times and price fails to break through those levels, it means those levels are strong. But according to the smart money, when you read about smart money, it will tell you that once a level has been tested more than 3 times, it becomes weak. It's high likely that when price comes back to that level, it's gonna break through and goes above that level. So you always pay attention to these. Like 3 times, less than 3 times, it makes a level, a support and resistance level fresh. But more than 3 times or 4 times, it makes the level weaker. So sometimes it might happen that price gets to resistance, and then for the first time it comes it will respect. When it comes back for the second time, it breaks through for whatever reason. Sometimes it's because of the economic news, of what fundamental fundamental analysis is based off one of the economic activities that are happening on that day. That's what normally moves the market, but most of the time it's supply and demand. It's a matter of supply and demand. To how many people do we have? How many people are willing to push push price to the upside? How many people are willing to push price to the downside? If there's so many people willing to push price to the upside, obviously you're gonna see the market shooting up and goes up and breaks that level of resistance and support. So there's also another scenario here. Let me see if I can find this one. Yeah, this is also another example here. This was our resistance. It was price pushed up, like price came back here, it failed to break this high. We saw a move to the downside, came back again, it failed to break this high. This is our resistance here, and then it failed to come to the downside, and then finally we broke out of structure. We broke out from resistance. Now we came back for the retest. So in most cases, what happens is if you are to trade resistance and support, once if price breaks out of the resistance, you always, the proper trade or a trade with highly profitable trade that you can take, it's and safe trade that you can take, it's wait for price to come back for a retest. Once price come back to test that old broken resistance, then once you see signs here and signals of for example, this one was a bullish market, you see a signal of bulls trying to push price to the upside, then you can buy, you can go long. But if it's on the downside, then you will short the market. So you always use that. Do not rush into a trade because you fear of missing out. Sometimes what happens is you think that price is breaking out of resistance, only to find out that no, it's going to the upside to collect orders. So these are some of the mistakes that retail traders are making. Once they get too many, they get so much, they are emotionally, and then they always want to be in a trade. They don't want to miss out in trade. It's FOMO, the fear of missing out. Support and resistance, you can make money trading support and resistance. You always trade in the edge. Another thing that's important, the support and resistance levels, the key levels that you're gonna find in a bigger time frame, in 4 hour to a daily time frame, those are the most important level. Those are the levels that price would normally respect. But if you find support and resistance on a 15 minutes or day on a 15 minutes, 30 minutes, it's high likely that price will not respect those levels. So you always pay attention to these. Do not force trades. Wait for price to come to your level. You plan your trade and trade your plan. That's what simply means. Like when you plan that, okay, I'm waiting for price to get to our resistance, and then when it gets there, I'll be looking for an opportunity to sell. You wait for that. You're gonna take beautiful trades. Thank you very much once again for watching. Please leave a like, a comment, or you can criticize. You can recommend anything that you would like us to discuss in this channel, we would gladly do so. Don't forget to subscribe and give this video a thumbs up. You can watch on more of our videos. Thank you very much for tuning in. God bless you all.